Greetings, this is Jeff Scott, and this is July 20th, 2014, and this is my weekend review. I always say it's going to be a short one when I got something else going on. I'm on my 29th anniversary trip in the beautiful Carneros Inn in Napa, California, and my wife's taking a nap, so I thought I'd sneak this in. I just took a gander at the futures. They're down a tad, but we'll get to them soon. I titled today Bull Trap or Another Leg Up. I'm sort of sitting here scratching my head, to be honest with you. I really expected that we put in a top this week. And on Wednesday, I was in a crown room in the morning, or Tuesday rather, as I was flying out of town, and then again Wednesday. And I was going more short, covering my longs, selling all my options in the long side that expired on Friday, which, by the way, didn't turn out to be a bad thing. And then Thursday came, or Wednesday came after Janet's speech when she killed, was it Tuesday? Maybe it was Tuesday was Janet's speech, where she killed off biotech and small stocks, which was not bad for my portfolio because of how I was positioned. Thursday was just awful. And, I have a net short position, but I had some longs that got killed. And then Friday, I saw my signal on Thursday night, which I'll talk about later, and I covered my shorts and went in deep on Friday. I'm still a little bit nervous. Friday was a great day, made up for the rest of the week, I can tell you that much. But I really, is this a bull trap or is this another leg up? So let's take a look and see what we can find. Let's see if I can make this actually. Apologize for the alerts. I just turned my computer on, literally just got back from a wine tasting, so you might want to be careful with anything you do based upon what I say today. Disclaimer, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm not here to give out individual stock picks. I'm a doctor, not a broker. Most physicians lose money with their investments, and I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and at one point I paid for everything that I demonstrate. I'm all about helping you become your own guru. I am not a guru. I'll never be a guru, but I like to believe that I make money in trading because I've been influenced by people that I respect and think are gurus. So whether they're Ian Woodward and Ron Brown of Woodward and Brown Investing, sort of the TA brains behind HGSI, both the investment program and a philosophy, really a take on O'Neill and Canslin. Other take on O'Neill Canslin would be Morales and Catcher, where they introduced us things like pocket pivots and Bible gap ups. Big fan of Alexander Elder. Here he is with Kerry at one of the recent live meetings that I attended. Here's my buddy George Lee, another one of my new buddies, John Person, who's my neighbor here in South Florida. Although I'm not in Florida today, and neither is he. He's on his trading cruise. Great book here, Mastering the Stock Market. I've really started to incorporate a lot of what John teaches with his pivots and his red candle or high closed doji and low closed dojis, which I think are pretty cool. I think about Jesse Stein and Minervini as sort of the applied science. Guys like John develop the science, and Stein and Minervini basically make it their own and show you how to trade well. Bigelow, the candlesticks, Van Tharp, money management, Anna Cooling, a reasonable to read volume price analysis book, very cheap on Amazon Kindle. And then I like Ronald Gronke from the perspective of covered calls and naked puts. For those of you who don't want to do what I do, which is trade high growth stocks and want to just generate premium. I have a lot of programs I purposely clean off my desktop to avoid going to them and getting you confused. But TradeStation or Thinkorswim are necessary for me for doing my trading, and then HGSI is where I do my analysis. Increasingly, EdgeRater is supplementing HGSI, not just from a market perspective, of which we'll definitely look at today, but also from the looking for signals, including during the market, as well as now from seasonal, which I'll show you a little bit of that today. And then I use MarketSmith, but I probably won't get into that today because I only got one monitor here. We've been living where this red circle is. Not that it's time to sell, but every time it looks like we're rolling over, we get another leg up. How many times have I said that? It's easy when we're in the midst of a deep sell-off or a major bull run to know where we are. Not so easy when we are stuck in this land of uncertainty. I think there are a lot of evidence that we're taking another leg up. At the same time, I'm worried and I'm not willing to give in to that, and I'm going to remain somewhat balanced in my approach until I'm proven wrong, and then I go all in or one way or the other. Now, one thing that we do in HGSI is we use our own indexes that we put together to get a sense of what the market's doing. So one of the older index we use is the Canaries, Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix. And they predated some of the market problems this year with a huge run up until March of 2014, a deep sell-off, and they're about halfway back. Now I could look at this chart here on the far right and I see things that suggest that it's on the verge of a breakout. I had a MOBO breakout from a squeeze. I had a DI plus minus crossover. I have a pullback on the daily bongo, but I'm long on the weekly, and I'm now long on the 13 and 2-day force. I've come off the high jump area, so I've got room to run. Down here, I had a kahuna, which means a big move up, and I had a eureka, which would be on the market. We're now using the NASDAQ. So the NASDAQ had what we consider to be the equivalent of a follow-through day. So if I want to be a bull, there's the case with the close breaking above the 8 in the 17-day simple moving average, 8-day exponential, and it could be ready to run. Now, why am I a little bit less excited? Well, I can't ignore these multiple pocket pivots down, the kahuna to the downside we had the day before. This here is on balance volume, and the red dash is its moving average. In strong uptrends, one expects an index to break above, or the on balance value to break above its moving average. And in a downtrend, the volume breaks below its moving average. As I understand it, on balance volume basically takes your daily volume and adds it to the preceding or subtracts it based upon whether it was an up day or a down day. So it sort of negates the impact of dark pools and options that may have pulled some of the volume out of the market. And it's something that John Person teaches and talks a lot about in his book. Well, you notice we're below the moving average on on-balance volume, so that's a bit concerning. If I look at the LLUR list, this is one we created in March at Palos Verdes. I'm not going to go through the 29 stocks or so that make it up, but it's been basing now for the better part of 3 months. You'd expect it be time to break somewhere. You notice we had a kahuna to the upside on Friday and a downside on Thursday. Here's that eureka, which is on the NASDAQ. We had a pocket pivot down. It's below the PSER. It had MOBO breakdowns from a squeeze, 3 of them in the last 8 trading days. Lots of reasons to be nervous here. Yet, to be honest, it's closed above the 8 and the 17 or on them, and it has not rolled over yet. So was that a false breakdown on Thursday and a recovery? And are we going on to new highs? Or are we just going to continue in the sideways chop? Or are we rolling over? I guess you have to make your own decision. And then if I look at the LLURs from Florida, and I probably should title this, so let me do that. Florida LLURs. Oh, you know what? It's in there. Hold on a second. Let me pull it down. There we go. Trying to hold on to the 17-day. All right. Trying to hold the 17-day, just like on the PV LLURs, pull back below that on Thursday with a pocket pivot and kahuna to the downside. On Friday, got back up, sort of a mirror image of Thursday, but it's still trading below on the on-balance volume, which is bothersome. So I put all these things together, and I think this is going to be an interesting week. And I enter the week with a number of ultra shorts still on, but still a lot of long positions. Many of my long positions are covered by some married puts, which is what I do, as I've talked about in the past, in times of market indecision. And I will write calls and write puts around those positions to generate premium and pay off the price of my married put based upon what the market does this week. If the market takes off again, then I'll cover all those positions and go net long. I'd be interesting to see what happens. And I really, this is an unknown. Market themes, it's different this time, does not exist. Eventually, we're going to not pay, but we'd expect at some point the market's going to pull back. Know your EPS dates, same as last week. Earnings season is here. Risk on, risk off tug of war continues. You saw Thursday and Friday. Risk was off until Friday when risk was on again. Bulls versus bears everywhere. Everywhere you turn on the financial news, everybody has a reason why they think the market is going up or down. Now, bull markets are often built by climbing a wall of worry, and boy, do we have things to worry about. We have Portugal, where the bank in question, I believe, has defaulted. The world is still standing. ISIS, off the front page, except I heard about some bombs. They took responsibility in Baghdad. Gaza, Ukraine, God bless the souls of those folks on the Malaysian airplane. Wow, what a tragedy. Saw something in one of the headlines this morning about the used car debt crisis, the second coming of subprime. Unfortunately, there's a way you deal with your car being underwater. You let it get repossessed. It's a little bit different than your house. But there will be people carrying debt on that. Who's at risk? Immigration, Argentina, speaking about debt and risk. So lots of reasons for this market to be at risk, to say nothing about the prolonged bull market that we've had. So in summary, this will be an interesting week. I'm in the camp that we're going to sell off sooner than later, but I may be wrong, and I recognize that, which is why I am not 100% short. I'm not 100% long. Cash is a great position, and I've certainly lightened up my number of positions, protected what I have to both sides. It's going to be an interesting week. So if you're confused, God bless you. Join the rest of us, because I don't think I've heard anybody who can tell me exactly what's going to happen and really knows any more than you do or I do. Future meetings, I've mentioned before that someone told me it might be the 12th and the 13th. It's the weekend, the Sunday and Monday, the second weekend of October. I'll be speaking as well. John Person has a meeting on Singer Island at the Marriott where I held mine. Great resort. October 3rd and 4th, I believe these are the dates. They could be the 4th and 5th. You'll have to check with George Lee. In fact, it's 3 days. I believe it's the 3rd, 4th, and the 5th. Problem is, it's also it's Yom Kippur for the Jewish audience like myself. But what a great meeting. George is going to take his meeting to the next level and make this one a little bit more advanced, and he'll be the predominant speaker. The PV meeting in October. I put my meeting in red, and my concern is that with Magenta Trader having a meeting at the exact same time, we have an overlapped audience. I'll talk to George about it and see what he thinks. And I am planning on doing another one in February in Singer Island, which was just a great meeting we just had. Got to know the week ahead. On the top part, economic releases for July 21st to July 25th. Natural gas has been moving, the market has been falling as they've had more inventory than expected. There's a bunch of housing and mortgage information early on. The CPI probably be a non-event. Obviously, on July 24th, initial and continuing claims will be important, as are new home sales, and then on the 25th, durable orders. If you look below, we're having a earnings extravaganza this week. Lots of your favorites, from Halliburton, one of my favorites, to Netflix, Royal Caribbean, the ship that John is on with his group right now, ARM Holdings, so many big companies, Verizon, Apple, Tuesday after the close. If you don't know what your earnings are, maybe you should stop the tape right here and take a picture of this, or better yet, go to leaveitbrothers.com, and it's no cost to become a member. You don't really get much except some pieces on the website, but this is updated on a weekly basis. On that note, let's go take a look at the charts and see what we think about this market. Let's quickly go take a look at the elder indicators. And so we're going to go into my elder signals setting, and let's take a look at indexes, and we'll start with the NASDAQ. So you can see a little bit of the indecision that this market has had. We've gone red, blue, red, green. You make money during trends. When the market is zigzagging like this on a daily basis, it's very difficult to make money. So what's to like about this? Well, we're in the midline and it's green. That's a lot to like. Our MACD histogram is below 0, but it moved up on Friday compared to Thursday. We're at 66% on the high jump bar. So you could argue that that's still bullish. It's green. It gives you, if you were filtering your potential trades, this would say it's okay to go long. Blue on the weekly and the monthly and continued MACD divergences. You could see with the price correction here, the MACD divergence scanner, red dots went away on the NASDAQ. The Dow, closer to the top of the envelope than the NASDAQ, clearly stronger. Here are the MACD divergence scanner showing up on both the daily and the weekly. Green means you have permission to buy. You can hold. You should not necessarily be selling on a green signal here on the impulse indicator. If I look at the Russell using the futures, you could see the weakness in the Russell as it took out its lower envelope, but had a reversal day on Friday, turning blue. Now you can see that on the weekly you're still red, and on the monthly you're still blue. The MACD divergence, red dots have been taken care of by this sell-off. So you're clearly at a natural place where you'd expect the Russell to think about bouncing. I think the jury's still out. Clearly this is the weakest that we've looked at. If I look at the S&P 500, probably the strongest of what we've seen. Now these are the futures, so this is probably a candlestick for today. Let me see if I can get my Yep, that's the 21st, so it's not really doing much. But you could see a big, almost a bullish engulfing pattern. It didn't take out the top necessarily, but a big, tall candlestick reversing what we saw on the previous day. Green, blue, and blue MACD divergence, still a problem on the weekly. It's been taken care of, at least on the daily with the recent sell-off. So except for the Russell, things are looking like they're still relatively healthy, although I think we all know that this is a market that is clearly under siege. Here's the NASDAQ futures or the NQs, NASDAQ 100s, and you could see kind of holding at where it closed on Friday. So I would sum up the elder indicators by saying that we see evidence of how trashed the small stocks were this week, and are they going to catch up? Or is everybody else going to follow them? Remains to be seen. But for the most part, we're seeing blues and greens. So you still have some permission, I guess, or if there's a filter that filters buy, sell, or hold, you still can be buying or at least holding. Now, just to give you an idea of the strength in the market on Friday. As most of you know, I track a number of things using my indicator set. And things that I like to look at are presence or absence of pocket pivots, green candle lows, red candle highs, ice hole failures, squeeze, MOBO breakouts and breakdowns from a squeeze, and viable gap ups. I look at a number of other things, but most of those are proprietary, and if you haven't bought them, you're probably not going to go buy them now, so I'm not going to worry too much about them. So as I look at this, what I wanted to point out was, first of all, the large number of viable gap ups on Friday. We're talking 22, give or take, viable gap ups on Friday, and we have some of our favorites there. We have Skyworks, which had great earnings. TriQuint is a pending acquisition target, but AVGO, among others, was raised because of Skyworks, as was RFMD. RFMD is acquiring TriQuint, not Skyworks, but Skyworks makes parts, analog parts for phones, and it raised everybody in its group. Petrobras, downtrodden Brazilian oil company. Maybe there's no what's the word, coincidence, but the Chinese leader was visiting with Brazil this week. Candy, electric car manufacturer in China. Google, some of you probably heard of them. One of my favorite holdings, Blackstone, which not only pays a big dividend, but has been a great growth story. Had earnings came out, was a big win. But a large number of stocks with viable gap ups. If I look at the number of pocket pivots up, in this universe is about 700 leading growth companies, and you could see a lot down to 264, and it starts at 132. So 132 pocket pivots up, and only a handful of pocket pivots down. Seagate, SunEdison, Schlumberger, Rig, so several of the energy stocks with pocket pivots down. I look for mobile breakouts from a squeeze, breakdowns. Only one mobile breakdown from a squeeze. And if I look at mobile breakouts in this universe, you could see a large number of stocks with mobile breakouts. So I'm starting, these are things that would be very bullish in my mind. When I look at my scanner, just to give you another idea of bulls versus bears, I put together a large list of stocks and I run person's buy-sell signals against it. And in a strong market, you have a lot of buys. We look at buy signal 1, as with his high close dojis, 127 stocks versus sell signal 1 of 9. So there's a lot of bullish indicators, at least if you look at the number of bullish stocks and stock chart patterns versus bearish. All right. How about other things that I like to look at? How about my review of EdgeRater related stuff? So just in case I need to go to EdgeRater, let me load it up. So some neat stuff here. This was, I don't even look at my holdings from last week because they're all different and everything is hedged. But I look at the stocks that I look to buy to get an idea of what the market did for the week. And these would be things picked a week ago on Friday after the market closed on 7-11. So I base my analysis here on my findings over the past week, 7-11 to 7-18. First thing is a lot of red, but still a lot of black. So kind of neutral, maybe a little bit less than neutral. Now the S&P 500 surprisingly was up 0.5% for the week. My buy watch was up 0.71. My GAF All-Stars, which we talk about now, Ron is really taken to a new level, up 0.36. Market Smith 250 was down 0.22. These were the stocks that I owned a week ago, which don't resemble what I own today. But they and the IBD 50 were down about 0.6 and 0.67. HGS 100 down 0.87. It's high beta stocks were down 1.89. Stocks and groups to the upside were down 1.8. So sort of an upside down week for growth stock investors. This is the one that I find to be most optimistic because these are the types of stocks we talk about on our program that I do here, and they actually outperformed the S&P 500 this week. Hindenburg's, I looked at, this is 826 of 013 going all the way to 718, and you can see we still haven't had a Hindi. Now, I wonder sometimes about whether the changes in the bar chart indices is going to prevent these from occurring. So I ran them against the NASDAQ, and I did 12 years worth on both. And they do fire. They just haven't fired. Part of the reason is you need 2% new lows. And if you look at where we are today, we're nowhere close to 2% new lows. And it will take a lot more than 2 or 3 bad days. Last time we had 2% new lows was back on May 7th. Why did I go long Friday? I was thinking about Friday night or Thursday night going out and giving my buy signal. I'm nervous. Those that have been watching me for a while, let me see if I can find it. It's a pretty good chart, and I should keep it closer available because it really is a good chart. Let's see if I can find it. We've learned a lot of things from Ian over the days, and I try to take some of the things he teaches and maybe to improve upon them or to use them differently in my trading. And one of the things that I like to use are called the buckets. And the buckets take the S&P 1500 and divide it up into 10% deciles, with the lowest 10% being counted as bucket 1 and the highest 10% being bucket 10. And that's dividing up 10 slices within the Bollinger Bands and looking where the stocks close, and then looking at how many stocks are above or below the midline of the Bollinger Bands. And then since you could be below the lower Bollinger Band, we have a box for that. And if you can be above it, then you have a bucket for that as well. So 12 different buckets and where you are in the midline. And what I find, at least in this bull market, is when we get very oversold and with 25% or more stocks trading in the S&P 1500 below the lower Bollinger Band, when we get to 75 to 80% of stocks below the midline, we usually reverse within 3 days. We've had one where we actually reversed quickly and pulled back again. This was my April 14th call, which was a damn good call, if I say so myself, of a reversal. Well, here's what we found on Friday. You tell me what you think, or on Thursday rather. Here was Thursday, 79% of stocks in the S&P 1500 trading below the mid band of the Bollinger Band, and over 25% trading below the lower band. It was pretty clear to me that we would see a bounce. What I can't tell you is this just going to be a short bounce and then we continue to sell off? Or are we going back to the land of milk and honey and cha-cha-cha and big returns in the bull side? I'm in the former camp, not in the latter camp. Where we closed on Friday, you could see we had a big reduction of those stocks below the lower Bollinger Band where they came inside. Still relatively bearish, 62% below the midline, but really not anything here that I call a signal. This is bearish, and this was on Thursday. This is the last big bull signal going back to July 3rd in a holiday light volume week, and you could see about 19% of stocks trading above their Bollinger Band and 79%. We've been selling off since that time. And here is April 11th when I made my call before, and you could see 86 versus 79 and 30 versus 25. I have to be consistent, which is why I added to my longs and reduced my short positions on Friday morning, which was the right thing to do. But I don't think we're out of the woods yet, but that's just my opinion. Other things that I do, also an edge rater. These are 8 bullish indices across the top. We start here with percent B change, looking for kahunas, which are defined as more than 24% for the light color, more than 40% for the dark color. They can be to the upside or the downside. And in the land of HGSI, those are momentum indicators. Then we have the percent B. Where does an index close within the Bollinger Bands? Above 1, you start to get toppy. Below 0, you're bottoming. And I'm looking for in green, 70% and above. In red, 30% or below. The rest will be in chop. This is the bandwidth. And then this is the Woody indicator. Green is long, red is short, and it's percent B times bandwidth. This is what you want to see, prolonged periods of a single color. This is not what you want to see, which is chop. And we have been in chop for a long time this year. Had a hint earlier or last month that we were coming out of it. And then a couple of things happened. If we go back to late May, it's like 5/21, we had kahunas to the long side occurring across most of these indexes. And that signified that we were coming out of the chop and entering a good time to go long. We had a series of kahunas to the downside on July 18th. No, that can't be the 18th, my bad. Oh, I can make that bigger. I don't know why I'm straining when I just have to do this. July 8th, we had a series of kahunas to the downside, and that sort of took us out of happy land for the bulls. Another shot across the bull bow on Thursday, and this really made me think we were about to start the great abyss. And lo and behold, we got saved with kahunas across the board on Friday. What's the truth? Are we looking at this and saying, look out below, time to go short? Or was that the correction and now it's time to go long? Very confusing. The next things that I track are a bunch of setups. These are George Lee setups. They're built into EdgeRater, looking at various types of breakouts occurring in a squeeze or breakdowns. You can look at daily, weekly, or monthly. If you're a fan of Morales and Catcher and EdgeRater, you can do a number of things looking for their signals, their code blue and their code red. And not yet available, I've got my own template that we made up of John's triggers, high close, low close dojis, and doing a lot of work with these with John, and hopefully this is something we'll get John's blessing on and we'll release at some point in the near future. So I go through that, and I hate to be confused, but I'm a little bit confused still. A lot of things tell me the market's going up. And I guess that's why they call it a wall of worry. Markets. Let's take a look at the markets and let's make some more opinions. In case you're wondering why I'm doing this, I'm on my anniversary trip with my wife. And that's because she's taking a nap. So I don't take naps. I'm a big boy. So we're down a little bit. I think that says 3.84, 4.6 on the Russell, 11 on the Dow, and 1.7 on the S&P. All right, so let's go into user groups. Woodward and Brown, Major Markets Plus, top down. Set my raw combo to make sure I'm searching for that. Let's take a look at what's working and what's not. Now, if you remember, this is heavy on yesterday and then the last 5 days, but it does give some credit for the last 2 or 3 weeks. So if I'm a long kind of guy, the Dow, the NASDAQ, up near the top as our mid caps is good. Gold in the middle, Russell 2000, not so good because a lot of the stocks that I trade are small stocks. Silver, gas, commodities, volatility on the bottom. So not a bad week for stocks, and we saw the S&P 500 was up over about 0.5%. We look at the 5-day performance, and gold and silver were laggards, as were small stocks. So if your growth stock portfolio suffered, you know why. We look at the last day, and we see that Russell had a much better day on Friday than it did for the week. It was up 1.6%. It means going into Friday, the Russell was down 2.3% on the week. Gold, silver, volatility all got hammered, as did the dollar, oil, and other commodities. I like to take a look at some of these real quickly. Let's take a look at the S&P 500. So most of you have been here before, but for those who haven't, let me do a little bit of explanation. Up on top are 5 ribbons. 2 of them are bongos. Bongos are a momentum indicator. 2 of them are force, which are price and volume related, also momentum indicator. They're calculated differently. In a uptrend, the longer bongo and the longer elder force are going to be green or positive. Since there's no volume on the S&P 500, I don't have force indexes. During a pullback in an uptrend, the shorter term bongo or shorter term elder force will go negative, signifying a pullback in an uptrend. As you can see here, we have a pullback in an uptrend by bongo. In the middle, we have accumulation and distribution. The darker green, the better. The darker red, the worse. Yellow is neutral. The high jump bar is a tool that we use that measures the stretching of the price from the 17, the 50, and the 200-day simple moving average. This market has a tendency to repeat itself, and when it gets up to the highest point that it's been, looking backwards, the market typically pauses to refresh or pulls back. On the DMI, DI plus and minus crossover is something I'm doing for internal use. From Morales and Catcher, Bible gap ups. Then I have the squeeze, sort of looking at John Carter's stuff of the Bollinger Band squeezing inside the Keltner channels. Yellow signifies a squeeze. From David Elliott, mobile breakouts in green, breakdowns in red. The red dots here are the Wilder's PSAR, a buy-sell system. I use them as support and resistance. I use them as a trigger for me to take a position. I scan for stocks that might be right below or above the PSAR dot, looking for opportunities. I use candlesticks. I use an 8-day, an exponential, a 17, 50, and 200-day simple. The gray line here is the Bollinger Band. You'll see on my stock charts a dark gray, which is actually the group index. Down here we have pocket pivots. Since there's no volume on the S&P, you won't see pocket pivots. In this window we have on balance volume. Again, no volume here. You also notice these lines here. These are called eurekas. These are taking some of the power of Richard Arms and looking for exuberance. The proverbial follow-through days in green to the upside, called eurekas, and follow-through days to the downside in red, giving us a sense of market behavior. And these are calculated only on NASDAQ. And on the bottom, we have kahunas, which I mentioned before, which are movements in percent B. In the light colors, greater than 24%, and the dark color, greater than 40. And we use those as a sign of momentum. If I take these off and just go to a simple price chart, one could see that we continue to be in a nice uptrend on the S&P 500. And if you've been watching me, you know that we had the last big pullback ending in November of 2012. And we continue to be in a nice move up since that time. Kind of going sideways the last couple of weeks, but clearly sideways in the setting of a major uptrend. It looked like Thursday was a meaningful day, knifing below the 17-day moving average, which has been support over the last month or so once we broke above it back here in May. But very quickly we got back above the 17-day. So one could still be bullish with an asterisk, and the asterisk being this is a market that is long overdue a correction, and we are in the summertime, and one would expect to see some volatility here. But looking at this, we closed above the 8-day exponential, and you can put your stop maybe a little below that S&P 500 until it takes out your stop. You can still be long this market. Go back to my pretty colors. If I look at, say, the NASDAQ, similar pattern. Below the PSAR dot, it did have a mobile breakdown from a squeeze, but it had a kahuna on Friday, a eureka. Its on-balance volume is above its moving average, which you'd like to see in the setting of an uptrend. When the market's in a downtrend, it will go below. So that's good to see. Breaking above its 8 and 17-day. Again, cautiously optimistic with an asterisk. If I look at small stocks, such as the Russell 2000, little different story, pulled all the way back to the, boy, that was fast. It got back from a top here, kind of a double or triple top, failed at this point here, here, and again here and here. So that's where resistance is, a little bit below 1210 on the Russell 2000. And in 1, 2, 3, 4, 5, 6, 9 trading days pulled from highs down about 80 points and took out the 200-day moving average, where one would expect it to bounce. And we saw a pretty good bounce on Friday with a kahuna. Russell's the weakest. We knew that from the elder indicators. Look at the Dow. Looks a lot like the S&P 500 trying to mobo break out to the above with a pocket pivot. Volume looks great and a kahuna on Friday. So the Dow, everything's green. This Dow looks good. Again, an asterisk. If I look at volatility, tried to break out on Thursday, failed again. Pull back, excuse me, 1 second, I'm gonna grab a water. So the Russell 2000, or excuse me, the VIX here, pulling back down. We know we make more money on a falling VIX than a rising VIX if we're long. And you want to see a kahuna to the downside on the VIX. See if the VIX can bounce off the 50, which would be bad for the bulls, or knife through and come on back down to its lower Bollinger Band where it's pulled back in the past. The dollar, lots of reasons for the dollar to bump. And you can see it did bounce up, I guess, with the especially with the anti-aircraft missile hitting the Air Malaysia plane. You saw a pocket pivot on the Dow on Friday. On-balance volume turned up a bunch of kahunas this week, pretty much green above. But the Dow ran back into its old friend called the 200-day moving average and failed. It failed again and closed almost where it closed the prior day. So the Dow did close. It had no change on Friday despite a big run up. A failure at the 200 of the Dow, failure of the dollar at its 200-day moving average could lead to improvement in stocks, especially those that do business outside the U.S. Gold and silver, if dollar had a run up, which it did over the prior couple of days with a gap up here, what do you think gold and silver did? Well, they probably suffered. Let's take a look at gold, and you can see dollar went up, gold went down, stayed above the 200, above the 50 and the 200, bounced off the 50. Going to have to break above that 8 and the 17 for me to get happy with gold again, but gold has not really sold off and bouncing off support perhaps here with the on-balance volume. And if I take a look at silver, looks about the same as gold. Yes, it's come off its top, but it hasn't given up the farm necessarily yet, and we'll see what it does this week. A lot will depend on the dollar. The next thing that I do is just get a health of the market. I'm going to go into Ian Aron's broad market indexes. I'm going to pull up the S&P 1500. And the reason I'm going to use the 1500, it's one of my favorite indexes because it's got the 500, which is large, the 400, which is mid, and the 600, which is small. And it also has volume. I already see something I don't like. So you can see the S&P 1500 has been pulling back now, just like the Russell 2000, and bounced at its 50, the Russell 2000 bouncing at its 200. You can see that on-balance volume has failed its moving average. Despite the kahuna on Friday, it is below its moving average. That's, to me, a bearish signal. If I go into the famous eye charts, get an idea of accumulation and distribution and some other things that might be worrisome. I see that the E's stocks in the S&P 1500, the distribution stocks in percentage, have passed the A's. So you see the A's have crossed below the E's. The E's, the D's, and the C's are trending up, and the A's and the B's are trending down. Don't like to see that. Here's A versus E's, and this is the percent of A's and B's versus their 10-day moving average, and they've been below their 10-day, which is what you'd expect to see in a sell-off. And interestingly, going back to July 3rd, when we had the signal of a potential, not a top, but we had the buckets going to their highest that we've had over the last couple of weeks. So this is all very supportive. This is showing me that on Friday and Thursday, and look back, it's happened before here where we had this 5-to-1 advances decliners in issues and in volume, and then the next day we had the opposite side here, but it hasn't happened very often. And that just, maybe this is the new volatility that we're seeing, the big swings. If I look at 10-to-1 days on issues and volume, you could see that on Thursday and Friday, from an AD issues perspective, we had a 10-to-1 move down, 10 times decliners to advancers on Thursday, and 10 times advancers to decliners on Friday. So despite the fact the VIX has come down and is at historic low levels, lots of volatility, I feel, underlying this market. And then I like to go into 05, take a look at industry groups. As you can see, we have 196. Now, I can start with the T1, and this gives me a sense of things that have been working for a while now. But what I really want to do is know it's working now. So I like to look at the 2-day force and the up and 2-day force down. 88 to the upside, that's a big jump over last week. And to the downside, we have none. All right, that gives you an idea of the strength in the market. So a little bit of a caveat. I feel that this is too fast. I also feel that the T1 is too slow. And I'm waiting for George to provide me with a 5-day force, which I think will smooth out. The 13 is too short or too long as well. I'm hoping that, but I like the concept that Ron brought us with price and volume, helping us to look at moving groups up and down, but I want it to be a little bit longer window than 2 days. So let's look at the best of the best. Notice I've ranked with raw combo. Let's just take a look real quick. Semis, renewable energy, communications equipment, biotech, oils, utilities. Utilities. Don't ever like to see this one up at the top, folks. I look for how many REITs I have. I still see dividend-paying stocks matter. Here's my, well, the telecom guys, as you'll see, telecom carriers have some dividends. I saw some REITs down here, retail REITs, healthcare REITs, hotel REITs, multi-asset class REITs, office REITs. So these are all dividend-sensitive plays. All were moving to the upside on Friday. Now what I do is very quickly go through the top 10. And since I haven't done this yet, I'm going to do it now. And I'm going to look for potential things that I might want to buy this week. Semiconductors, as I mentioned earlier, Skyworks was probably the poster child here, had a huge up week and brought the market with it. Let's get this up here. So let's put on a right kind of a view. So what do I see here? Everything turned green. This is a viable gap up, mobile breakout from a squeeze, a big kahuna, on balance volume taken off. What's not to love in Skyworks? Well, what's not to love is it closed. Let's take a look at the price action here. A lot to love here. I'm not poo-pooing this at all. If I was to buy it, if it trades above the open, the close would be about 53. And if I put my stop at the low of the day, 49.67. So I'm going to have about an 8% stop here to play Morales and catch your rules. I might be willing to do that. Beautiful looking chart. It's been in an uptrend. Pullback to support on the 50 and took off on Friday. Looks great. Earnings are out. Something, not risk less. And if you've read Morales and Catcher's book, you know how to play Bible gap ups. Intel, not surprising, forming a flag here. I'd probably not be in this stock for a number of reasons, but I'd like to see it make up its mind on the flag anyways. Certainly let the flag develop before I would jump in there. RF Micro, this one I'm interested in, and for a number of reasons. Great earnings per share growth. Same industry of Skyworks, and looking to acquire, or it's already acquired or hasn't closed the deal on TriQuint Semiconductor. I can buy this stock. Let's say I take it out, I put in a buy order for tomorrow. I'll put my buy order in somewhere above, say, at $10.40. Market sells off, I'm not going to take out the high. I'm going to put my stop $9.85. So I've got 55 cents on a $10 stock, so I got about 5% risk here. I could set my stop even more careful, a little bit below that 200 moving average, which might be about 9.45. The reason why I like this one more perhaps than Skyworks is I'm only putting about 5% at risk instead of 8. The stock gapped up some. It had a viable gap up, but has not run away. It's just took out its prior high, closed at it. Everything is green. Mobile breakup from a squeeze and a kahuna. I like this one. I may like this one even more. Both look great. Avago, this is the one I actually own, and I've been wondering what to do with it. Looks a lot like RFID, much more expensive stock, good earnings per share growth. Did not have a viable gap up. That had a mobile breakup. It takes out the PSAR. It might be interesting as well. Notice the kahuna and the pocket pivot. Fairchild had an upgrade. Don't know much about this. Great earnings per share growth. Actually looks pretty interesting as well. So, place to play in the market. There's TriQuint, the one that's the takeout. Maybe you want to be looking at semiconductor devices. Renewable Energy Equipment Index. Now, this is a stock you either love or hate. I've made money on it. I've lost money on it. Plug Power. Whoops. Let me see if I can set this one up right. Plug Power has been a poster child of big run-ups and hard pullbacks, but it just had two major brokerages come out with upgrades and high and price targets in the $8 range. I played it back here. I thought I was playing it here, and I gave back a little bit and got out. So you have a stock that's been basing, had a kahuna on Friday, mobile breakout from a squeeze. It's still in a downtrend based upon the weekly bongo. Play this one at your own risk. This is a stock that was trading back here 190 million shares a day. Traded yesterday 17 million. Solar City, pulling back here. I mean, this used to be a lot more exciting growth stock story when it was doing this. Pull back here. Maybe it's a false breakdown and wants to run again. It might be something worth watching. Solar City. I don't usually go below the index. Sorry about that. I've noticed when I do some of my changes and switch the resolution because I'm out of town, and not on my computer with the right resolution, that I have some problems with my window sizing, etc. Mostly because I haven't taken the time to fix it. All right, next group is communications equipment. These were a hot one last week. Apple having a nice little run. Will Apple go to 100? Pull back to the 17, had a nice day on Friday. On-balance volume is negative, probably, or is below its moving average. Doesn't look so hot. I mean, I think there's a lot of people are expecting it to hit 100, but what happens after that? Ericsson, viable gap up on Friday. 2.4% dividend play. I have no idea what's going on here, but it had a pocket pivot, viable gap up, OBV turned positive. I might want to go to more info from Webb, look at FinViz and see if there's any news that makes sense. Maybe they had earnings. Solid Q2 results. To get that, folks, all I did was right-clicked, more info from web, and then selected FinViz. Nokia, not that exciting. Cisco, it's in a nice lower left, upper right run. Well, not really. It was below the 200 here. Not much in the way of earnings per share growth. Used to be a high flyer. It's not a growth stock for me today. I'm not interested. Back? Well, actually, I'm interested in Aris Group. Let me go back here for a second, take a look at ARRS. I had somebody actually mention Aris Group as potentially, this is a stock that looks kind of flat here, but let me give it some life. Big uptrend, pullback, uptrend, pullback. What a great place to watch. It's right below PSAR dot. It's just above the 50-day moving average. Had a mobile breakout from a squeeze, DI crossover. Had a kahuna a couple days ago. I scan for stocks that are squeezing right below the PSAR dot, and this is setting up at an interesting buy point. I'll let it come to me and cross above that dot. I won't jump into it beforehand, but it's squeezing right above the 50. I can set my stop down here. Buy it at 33. I think this is an interesting looking stock and one that I'll be looking at. Biotech. Gilead. Interesting week. A lot of these sold off hard after Janet's speech, but I think the big guys did okay. So this has been one of my favorites, and about a year ago I called it, or not even a year ago, I said this would be the Celgene of this year. And if you look at where it's done, it had a huge run, sold off hard in March when the Congress started questioning the price of their drug. And oh, by the way, it closed at an all-time closing high this week. So despite all the stuff that Congress might be questioning and everybody's questioning on cost of their drug, they continue to set new highs. Like many biotechs, here's Tuesday, Wednesday, Thursday, sold off after Janet. Big up day Friday, up almost 5% on a kahuna. Mobile breakout, but not from a squeeze. Has not taken out its top here. Still looks very good. Look at the earnings per share growth. This guy's problem is going to come from multiple places. It's going to come from legislative changes on how we pay for medications. But if you've heard me discuss this in the past, that's probably several years away. It will have some competition from ABBV and others. But for now, its Hep C drug is on fire. Amgen had some good clinical trial results. Not really doing much, kind of sitting on a squeeze of the 50 and the 200-day moving average. Did have a kahuna, and it pays a dividend of 2.1%. Not that exciting. MPS, nice day on Friday with a pocket pivot and a kahuna, but its OBV is below the moving average, and it's sold off hard and still below the 200-day moving average. BioMarin, ditto. Alexion, squeezing here, going sideways for quite some time. You can see the group sold off, moving back up a little bit. You know, maybe it's a good time to get to Alexion. It's got good earnings per share growth. They're making a ton of money, and they're using that money to go out and acquire compounds and build a company. Expensive stock, though, at $162 a share. Celgene set an all-time high up here, has pulled back from 91 down to now it's 85, 86. Like a lot of stocks last week, sold off hard after Janet spoke. I think it's got a little repairing to do. You notice it does not have the earnings per share growth of a Gilead or of an Alexion. I do own this as well as Gilead, but I've got some married puts on Celgene. Integrated oils. I mentioned Petrobras. Just take a quick look at a couple of these. Petrobras gets 2 of the slots. Long-term downtrend, if we go to a weekly, so the stock has been in the penalty box for some time, but something has changed. Look at the group strength. If I look at the daily chart, I see a big gap up this week. It's an ADR, so it's kind of gappy anyways. I believe it's an ADR, maybe it's not. Look at the on-balance volume, Kahuna. I think the stock continues to rock and roll. It pays no dividend. Here is YPF, an Argentinian, I believe, energy play. A refiner in Argentina, 0.5% dividend. Mobile breakout from a squeeze. Kahuna and pocket pivot. Look at the nice on-balance volume. Wants to go higher. And then we have Petrobras, Argentina, which looks very strong. Continuing on. Utilities we're not going to look at. Automobile OEMs. We'll look at Tesla and Candy. Tesla is one of our canaries. It's sitting at an opportune buy point right on top of the 50, but it's not giving me any reason to want to buy. Its on-balance volume is below. Maybe it's going to base here and run again. Right now, I'm just watching. Candy showed up on a lot of nice lists, and you can see Candy did break out, heading up. Here's group strength, and its on-balance volume is above its moving average. All right. In the essence of time, let's just take a look at the next 3. I'm not sure I'm going to go through them. Now let's look at oil exploration and production. Kodak Oil is actually being bought by, is it WLL? It might be WL. I can't remember. Somebody's buying Kodiak this week. The original transaction looked like they were paying less than what the price of the oil company was. Obviously, what I interpreted was wrong, because you could see the stock has moved up steadily since the announcement and setting all-time highs. I am in this stock. That's why I was trying to figure out what it's worth. I don't know how to play a stock. Well, I won't say that. I know how to play a stock. I'm not sure I want to go out and become a new owner of a stock that's currently in a takeover. The boards have already agreed. Pricing may go up and down. Whiting, I believe, is the acquirer. They gapped up with the news. Newfield Exploration, PSAR breakout this week, mobile breakout from a squeeze. Kahunas and pocket pivots, make some money, does not pay a dividend. And the other one that I own is Diamondback, which pulled back and looks like it wants to run again. Closed above the 8-day exponential on Friday. Kahuna, pocket pivot. I might be early here. I got back in at the end of the week. I think the stock is ready to roll again, but buy at your own risk, as is everything else I talk about. So enough of that. So to me, that's what top-down investing is. I go through the top groups. Usually I go through 10, but in the essence of time, and this is my anniversary trip, I'm going to stop there. Lastly, I do some tops-down things. I go into all securities, and I go to sprinters, which is one of my favorite things. You can find it in many different places, including in your smart groups. But let's just take a look at my sprinters here. And I'll look at the first 10, see if I can find anything that I want to go look at further. Canadian Pacific Railway. You know that railways have been strong because of the best transportation we got right now for oil. Take a look at things like Greenbrier and Trinity that have been involved in making trains, and you could see Canadian Pacific breaking out after a base for about a month here. Multiple pocket pivots, Kahunas, on-balance volume is positive, everything is green. What's not to love here? PE of 28, dividend less than 1%. It's an expensive stock, but it's probably going higher. Aetna, saw insurers break out this week on great earnings. You can see pocket pivots, Kahunas, great OBV, breaking out to new highs, all green. Aetna looks great. Rec stores, don't know them, but I know a lower left to upper right when I see them. Are these? They sell ethanol. Okay, so they're alternative energy. Everything's green, lower left, upper right, don't know much to comment on them. DirecTV under potential acquisition by AT&T. Here's Skyworks, which we talked about. Post Marriott's one of these REITs. It pays a 2.6% dividend. These have been strong this year, lower left, upper right, and wants to break out perhaps to all-time highs. OBV looks okay. BNY Mellon, nice move up on this asset bank. Everything is green. OBV is positive since I hold some of my assets. Nice to see that they're okay. What else do we got here? PAC, have no idea what this is. This is a transport, airport transport. Mexican airport business pays a 7% dividend yield. Okay. Now I see why it's up here. So huge dividend, nice move, lower left, upper right. Do your research. I can't really comment on this stock. So I start often by looking at these. I'll look at the next two because they're stocks that have been in the news a lot lately. Green Plains Renewable Energy, great earnings per share growth. Nice move up, lower left, upper right, tight, still a leader. And then the other one is Pacific Ethanol, which really has also had great numbers. I don't know what's going on here with the earnings. Here's one thing to remember with PEIX. January 31st, it was a $7 stock. April of last year, it was a $4 stock. July of last year was less than a $4 stock. So this is a stock that's had a storied career and has gone from $4 to $18 in a year. Pretty amazing run, I suspect, driven by revenue and earnings per share growth. Other things that I personally like to do, I like to go into my, hold on a second. I'm going to go into the smart groups, and I'm going to go into Jeffrey Scott, and I'm going to look at pullback to the 50-day moving average with a kahuna. And I'm going to, let me just do this. These are stocks that should be, and I'm going to actually do something different here. Go to all securities. And then this is under my name. This is a view. So it requires a full kahuna force, both kahuna up and force up, price above $2 and 150,000 shares, above the 200-day moving average, and within 1% of free parking, which is the 50. So these will be pullbacks to the 50-day moving average in an uptrend. Let's go through the first 4 or 5 of them, see if anything looks interesting. Kind of sideways, pullback here, good earnings per share coming in, kahuna, pocket pivot, great on-balance volume. My first impression was, no, it doesn't look so good, but I'm probably worthy of a little bit more look-see, 1.9% dividend. When I see the OBV heading up like that, the pocket pivots and the kahunas, Crown Castle. CVS, uptrend, pullback to the 50, had a kahuna, forces positive. AstraZeneca, AirCap Holdings, aircraft leasing company, no dividend. I don't see anything that's been a great, here's Berkshire B, a kahuna on the 50-day moving average. So just a point about this, I don't always find candidates with this scan, but what I should find are stocks or assets that have been in an uptrend. Go back to a weekly, you can see clearly an uptrend, that they've stubbed their toe and gone sideways and pulled back to their 50, and that while they're in this sideways motion, they get a kahuna, and that's a trigger for me to take a look at. Another one of the scans I like is PSAI reversal close at squeeze. And these are stocks, these probably look a little bit better, are stocks that are by definition, they're squeezing, so the yellow dots, and they need to be right below their PSAI reversal die. And a price move through that PSAI reversal is a trigger, and I set my stops often based upon, or my buy stop just above the PSAR dot. So this is AVGO. We already talked about that. This is one of the ones I currently own. Here's CVS. So CVS squeezing right below the PSAR reversal dot. On semiconductor, squeezing, had a mobile breakout from a squeeze, a kahuna, right below, so taking out that PSAR dot might be a reason to be long. Here's Eris, squeezing right below the PSAR dot. CSX, nice, another railroad, squeezing right below the PSAR dot. OBV looks outstanding. CSX pays a 2.1%. So I'll do numbers of scans looking for stocks that meet my criteria. I will look at volumes stories. Anything to do 5. These are stocks that had a 5 times volume on Friday. And I'll go through these very quickly looking for buy-sell candidates. Sideways, big move, cheap stock. I'll skip it. RDA Microelectronics, is this in the same world as RFID? Semiconductors. So this is in that same group that's moving, and what is its volume? 50-day average volume is 256,000, and it had 4.5 million. This is a Chinese company. I'm scratching my head going, interesting. Huge volume, not a bad chart pattern. Any news? Oh, they got bought out. Never mind. Biofuel Energy, similar running time, running mate to plug. OBV is positive, coming out of squeeze with huge volume on Friday. This looks like another buyout. All right. If I don't find much here, I might look at my 3x volume filter. Skyworks, Shire is a buyout. Intercloud has been moving. Can't tell there, but the OBV went positive. Okay. So the point of scanning is to find things that you might not otherwise have seen. Now, I've already done my group inclusion filter. I found 25 stocks or 30 stocks. And so I'm getting tired. You've got to be tired of listening to me. This has been going on way too long. Let's just look at my group inclusion report for this week. And let's just take a look at these and see if there's anything we haven't already talked about. And I'm going quickly on this because I'm tired. Aetna, we already looked at. Breaking out insurers are strong. Eris Group, we already looked at. It's in a strong group as well. Same with Avago. Banco Macro SA, don't know anything about this bank. Argentinian Bank, this is all about if they can come into a deal on their debt. If they can and they pay their bills, Argentina is ready to explode up, in my opinion, but it remains to be seen. Here's a French bank, I guess, based upon its terms. And some of these international banks have been strong. Nope. Uruguay and Argentina. Argentina again. YPF earlier. Argentina. Online retailer internet. In the auto, I think it's more of an advertiser. Bit Auto, nice run up. A little bit of a pullback. 3-day pullback. Looks like it wants to run. OBV looks fine. CP, we already looked at. Looks great. CBRE, these are real estate. Pays no dividend. Nice lower left, upper right tight. Good earnings per share growth. Do your research. This is one I might want to know more about. SciTech Industries, diagnostics, miscellaneous chemical, aerospace, adhesives, automotive industry, etc., etc., etc. Mobile breakout from a squeeze, gap up with the kahuna pocket pivot. This looks very interesting. I put this on my list. I need to go look at more. Then I see it's $108. Expensive stock. EOG Resources was in IBD this weekend as a American oil company in a pullback to support. Facebook breaking out again. Gentherm, an auto parts store, cooling seats, lower left, upper right, All-Star. Point is, these are all leading stocks. Here's Greenbrier. I mentioned them, one of the companies that makes trains. Is this another Argentinian bank? I'm betting it's Argentinian. God only knows what to do with these guys. Kodiak Oil we looked at. Lam Research, expensive technology stock, pulled back a little bit with a MOBO breakout. Look at OBV. It went positive back in April and has not given up anything since. PSAR supportive, it looks pretty good. MMP, one of the midstream oil and gas. These are dividend pays, 2.9%, kind of going sideways here. Point is, using the group inclusion report, you find the leaders. Here's Micron, a little bit of a pullback this week, but still at the 17-day and a nice move up. Questcore is a buyout target. RFMD we looked at already. Skeechers, sort of a cup and a handle, breaking out, mobile breakouts, OBV crossover. Had a mobile breakout from a squeeze. It makes good earnings per share growth, trades at a multiple at a discount to its growth rate. Skeechers looks interesting. Skyworks, we talked about already. Spirit Airlines, haven't seen a lot of airlines today. Spirit is one of the leaders. Delta sold off some, but maybe these guys are going to start to move, and you can see Spirit's at an all-time high, breaking out, had a pocket pivot out of a squeeze. Super Micro, this is one of my holdings, as is the next one. Uptrend, doesn't look like much on the daily. Let's take a look at the weekly. Uptrend, pullback to support, and a breakout on Friday. Actually, I had options I forgot to cover, so it is my stock now. Blackstone, this has been a great performer for me. It's been a great year as they've sold off assets. It pays a 3.9% dividend yield. I've held this one since the market I bought it a long time ago, and you can see it's run up in the last 2 years from $12 to $36. This has been a great performer. The point here is that this group inclusion report, here's Triangle Petroleum, uptrend, pullback, Kahuna, mobile breakout from a squeeze, looks like it wants to run. And Trinity, like Greenbrier, they make the trains. Kahuna, pocket pivot. And here's one of my other big holdings, United Rentals. What a beautiful lower left, upper right. Multiple pocket pivots before and after earnings came out this week. Clearly a leader, just blew out earnings. And VIPS was a holding that I sold way too early. Chinese internet flash retailer, lower left, upper right. The purpose of that exercise, and here's Westlake Chemical, again, another leader, breaking out again at a top here, is that those are great stocks, that last batch. All I needed to find them was to go in to a thing called Group Inclusion Report, identify your favorite groups, check off your favorite scans, hit OK, I wanted 30, and you get a list of great stocks. On that note, I think it's time for me to go see what my wife is doing because, as I said earlier, this is my anniversary trip. You all have a great week. I'm glad I could be with you again, and we'll do this again hopefully next week. So, in summarize, is this another leg up, or was it a bull trap? Safe week. Good luck. Goodbye.